In this video, I will share with you how to use the invoice factoring spreadsheet that I sell on Etsy, and I also sell this spreadsheet on my website. So if you're interested, check out the link in the description. So what is invoice factoring in the trucking world? So invoice factoring trucking world is basically a trucker selling their invoice to a third party to get cash quicker. So for example, as a trucker, let's say I have a load and I take it from point A to point B, which is the destination. So when I reach the destination, I will give my customer or a broker an invoice, right? But I don't get the money to that invoice right then and there. It usually you have to wait 30 days, 60 days, sometimes even 90 days, right? Because each of the invoice they have a net term of like net 30, net 60, net 90, something like that. And so as a trucker, sometimes I need the money right away. And so what I can do is, instead of waiting 30, 60, or 90 days to get the money from my customer or the broker, I can go and sell that invoice to a third party factoring company. And they'll take that invoice and they'll advance me the cash on that invoice, but they'll take a percentage of that invoice, right? As a service. That's a service they provide. So they'll take that fee. Usually it's 3%, and then also they usually sometimes take a reserve percentage as well. So if something goes wrong with the invoice, they can't collect it or something, then they'll take that reserve. But usually, if everything goes right, the factoring company will give you the advance minus the factoring cost, and then they will return you the reserve percentage as well. Okay, so what is this spreadsheet and what is the purpose of it? So I built this spreadsheet from an accounting perspective. So I want to see the revenue and expense. So basically, this spreadsheet can help a trucker track their total invoices, total invoice amount, and the amount that they factor to a factoring company, and what is the net amount they receive after all the factoring costs. And then you can see what is truly your cost. Is it just that 3% that they take, or is it more, right? So you can see what is your effective factoring rate, how much money you paid, what's the true cost, and did they take any of the reserve, and then what is the turnover, like how many days does it take you to get the money from the factoring company. Okay, so that's the purpose of this spreadsheet. So first let me show you how each tab work, and then we can do an example, and then after that I can show you an example of everything being filled out so that we could play around with the dashboard a bit, because this template has a dashboard. All right, so you purchase this template, you have 4 tabs. So the first tab is the invoice setup tab. So this is where you put in your invoice amount, invoice number, and then these information related to the invoice as well if you want to, it's for informational purposes. And then step 2 or tab 2 is where you input in the factoring company information um, over here. And then here is where you would complete the invoice factoring. So here the idea is you pick the invoice and then you pick the factoring company, and then you put in the fees, additional fees that they charge you, and you pick the payment status, and then the spreadsheet would automatically calculate your net payment that you receive and then the total cost involved in factoring that invoice. All right. The summary analytics is basically a dashboard. So these are all drop-down menu that you can pick from, right? You can pick just the year, or you can pick to see what month it is. You can pick to see just one factoring company or all the factoring company. You can pick to see all your invoices or just one invoice. Okay, so let's start. So let's do an example. So here, let's set up one invoice. So I'll just do invoice number 1. And let's say the amount of that invoice is 10,000. So let's say this is just for informational. So load 1, let's say BOL. Okay, invoice date. So invoice due date. So this is 31. Net term on that invoice is net 30. So meaning they have to pay you within 30 days. Broker client. So just say customer. Oops. Customer 1. All right. And then the step 2 is the factoring company setup here. So here you put in the factoring name, factoring company name. So let's say ABC Factor. Okay, and then recourse type. So there's 2 types usually in the factoring business. So there's recourse and non-recourse. So in a recourse, it just means that when you factor something to a factoring company, they can return the invoice back to you if something goes wrong, right? Let's say they can't get the money from um, the customer or the broker, they'll return to you. So it's basically like they can refund you back. And usually with the recourse, it's cheaper, a cheaper rate because they can return it to you if something goes wrong. A non-recourse is when it's usually a lower rate because usually if something goes wrong, that's the factoring company's issue. It's no longer the trucker's issue, right? So if the let's say the customer doesn't pay, that's the factoring company's issue to figure out, right? You already got your, as a trucker, you already got your advance and you're on your merry way, you know? So usually with a non-recourse, it's more expensive because, you know, if something goes wrong, the factoring company will have to deal with it and not you. All right. So I'll just pick this as an example as a recourse. And then fee structure in factoring, it could be flat or time based. So flat meaning it just basically a rate charge on the duration of the invoice. So for example, if so some factoring company will charge you, let's say 3%, regardless of how long it takes to get that money from the uh, customer or the broker. So they'll charge you 3% whether it's like 30 days, 40 days, or 90 days, right? It's a flat fee. But time base, the duration of it affects the fee. So for example, if let's say it takes 7 days for the factoring company to collect the money, then they'll charge you maybe 0.5%. But if it's like 30 days, they might charge you 1%. If it's 40 days, they might charge you, 3%, 60 days, maybe 44%. Okay. So time based is just, the rate increases based on the duration of the invoice. All right. So I'll just say flat. So here, let's just say this company will charge me 3%, and then the reserve holdback, usually, let's say they charge me 1%. Here are just all the informational here. So reserve period release, maybe after 30 days they release it. Payment method, they'll probably pay me through ACH. Contact information, so you can put a sample contact, or you can put number here as well, a phone number. And then funding time frame, maybe 3 days. Maximum credit limit, let's say they give you 50,000. Okay. And then invoice factoring log, here is where you could pick which invoice you want to factor. So right here, let's say I pick invoice 1. So if you notice, once you pick the invoice, over here on the gray cell, it automatically pick up the invoice number associated with that invoice number. So if you have more invoice, let's say you have invoice number 2, here, the drop down menu would also increase, right? So you can pick that as well. Same thing with the factoring company here. Here you can pick which factoring company you factor that invoice to. You can put an ABC factor, but let's say if you add another company, right, the drop down menu would also increase, right? But let's say we're just doing ABC factor, so we're factoring invoice 1 to ABC factor, and they're going to charge us, let's say, an additional $150 on top of the factoring rate, right? So this additional fee would be like admin fee or recording fee, all these odd fees that they charge you, okay? And then so let's say we submit this on 1/2/2030, right? And then payment status, if you click submit it, so I mean you just submit it to the client or to the factoring company, and you notice here the net payment amount it already calculate for you. So 10,000, right? Minus your 3% factoring fee, and then 1% reserve, and then also that extra $150 that you have to pay them, which is non-refundable. Then this is the total amount you would get when they pay out, 9,450, right? So if you click submitted, you see an amount here. If you click approve, you also see an amount here. But if you hit rejected, you're not going to see an amount here because the idea is, if they rejected, they're not going to pay you anything, so you're not going to get this money, right? So that's why it's blank. But let's say they partially paid you, so they send you the advance with the reserve held. So you get $9,450. You don't get the full amount back yet because there's a $100 reserve, okay, that they're still holding. Okay, so let's say here you got the partial amount. So you got the advance payment, but they held your reserve. So let's say they paid us on 1/4/2030. So see here, it can calculate. It tells you that they pay you with a turnover for that's 2 days. Okay, so let's say a few days later they paid you advance, but they have some reserve that they held. So you see when you pick this option here, partially paid advance payment sent with some reserve held, column H, it highlights yellow, or it glows yellow because it wants you to input the amount that the factoring company hold, uh, the reserve that they held, because usually they have to return that to you if everything goes well, but sometimes things don't go well and they hold it, right? So the reserve cost is 1% of that 10,000, which is $100. So but they're paying you the advance, but they're gonna hold some amount. So they're gonna hold $50. So you're gonna get $9,500, right? Because you're getting $50 back, right? So instead of a reserve being $100, your reserve is just $50 because they're holding that $50 back. Okay, so for example, if you choose this option where paid in full advance reserve release, then this won't be yellow, so that means you shouldn't have a number here. So this means that you get all your money back, so you don't have any reserve cost. You can see reserve cost is 0, so your only cost would be that 3%, which is the factoring fee. So 3% of 10,000 is 300 plus that $150 that the other costs, right? All the other costs that they charge you on top of the factoring fee. So that's 450. So 10,000 minus 450 is 9,550. That's what you'll get back. Okay. So that's basically how this works. So as you have more invoice, and you can, factor those invoice to any of the factoring company you have that you have set up here. So all the factoring company that you have set up here on this tab, it would be part of a drop-down menu here on column C. And then all the invoices that you have set up, it will be part of a drop-down menu on this invoice factoring log on column B. Okay. And then as you pick your invoice and the factoring company, all the required data will auto populate, and you just need to give it additional data here, and then it will calculate your net payment after factoring cost. Okay, so that's pretty much how it works. And then once you're happy with this, and then you just want to see how you're doing, right, you can look at this dashboard here. So here we only enter in data for 1 year, or I mean for the year, only one item, right? So as you can see, we only have one item that we factored. The amount was 10,000. The net payment received after factoring cost was 9,550, and then our total factoring cost is 450, and then effective factoring rate 4.5%. And you can see here the average factoring fee was 3%, but the effective factoring rate is 4.5. So why? Because the effective factoring rate includes all the cost involved in factoring that invoice, not just the factoring fee that the factoring company told you, right? So they told you, let's say, oh, I'll charge you 3%, but in reality, they charge you more because they want other fees, right? Like maybe admin fee, recording fees, or I don't know, like printing fees, all these fees that they charge on top of it. So usually your factoring fee, effective factoring rate, is higher than your factoring percentage. Okay, so here you have some data here. You have a line chart that tells you how much you factor for each month. And then here you can see, just here, it tells you what your factoring rates are. You have effective factoring of 4.5, your average factoring fee is 3%, and your average reserve holdback rate is 1%. And here you can see you have a original invoice of 10,000. You paid 450 to get that $9,550 in a few days, in like usually 2 or 3 days. Okay. So let me show you a spreadsheet that I have where I thought a lot more data, so we can see how the dashboard works. So this one has a little bit more data here. So as you can see here, if I pick the year, and all this other option here is all, meaning I want everything for the entire 2030 year. So you can see here I have 14 invoice that we factored, And then you can see here as well, this line chart here is fully filled out for the year. Okay, so let's say what if I just want 1 month? Then don't pick all, just pick whatever month you want here, right? You want May. You see here, only 3. We only factored 3 in May, right? 3 invoices in May. So let's say you just want to see, just want to see ABC factoring. Okay, so you can see here we only factored 2 to ABC factoring. And then let's see what invoice number. So we only look at that invoice number. See, that's the only invoice we had. And this is the invoice amount. This is the net amount we received. This is our effective factoring rate, and this is our factoring rate here. Okay. So that's basically how this spreadsheet would work if you purchase this on Etsy or in my shop. So if you're interested, check it out. It's pretty cool. And if you have any questions or feedback, let me know. And thank you so much for watching.